Good afternoon, Scott Redler, T3 what? T3 Live. Welcome to today's recap, and obviously you can see it's been a long week. With that being said, it's definitely very funny the way the market works, right? We know that we broke the accelerated trend line at 1830. We know that 1770 holding 4 or 5 days broke, and then we came into the new support. And then yesterday, just as we were testing that support, I think every network had every major doomsday guy on out there that we have to, hit the 200-day. We might even be down 15, 20%. If we don't hold today, we could be down 40%. Basically put the fear of whatever you want to call it in you to play a calculated bounce. But if you had your TV sets off and you just said, okay, I'm going to look at the setup that presents myself here at a key area, and use the red dog reversal, you know what? It worked out perfectly. It was hard to do considering all of the doomsday guys yesterday, but in actuality, you look at the chart and it worked out pretty clockwork. You look at the macro trend line all the way down here. This was the 200-day that everyone said we had to touch. You don't always have to do it in a straight line anyway. And then here is the 150-day moving average that Patty Dom quoted to me. We had on Twitter, and everyone's like, "Why do you look at the 150-day?" I'm like, because everyone wants it to go to the 200-day. So either we're going to stop in front of it, or if we get to the 200-day, we're probably going to push below because it's not going to be that easy and then come get it. So it's just a spot to watch. And then if you take a closer look at that spot, you will see that you had a red dog reversal that almost gave you no risk, okay? Because it briefly went below 173.83, hit a low here of 173.71. So that is what? 12 cents worth of risk. That's what it was. 12 cents here. If you wanted to use this low, 174.11, then you had 40 cents worth of risk. So I know with the way everyone was talking and this and that, it was hard to trust, but all in all, just with that pattern, and then you closed okay. If you would have bought here, put a stop in, you then had today where this was your pivot to add. Once we went through 175.80, which we also talked about this 2-day pivot, I said a 30-minute close above, we could see it move back to retest 177. So anyway, with that being said, we are now here ahead of Jobs Friday. So what to do, okay? For me, I went out neutral just to make a point. I'm like, here's your 2-day snapback. Some people probably started shorting the spiders, thinking that, they could do it right here. Okay, maybe they have a whole system for it, that's fine. But they always push the envelope. So in my head, this is what, if you come back to me, there are the rumors everywhere that we're going to get a 300,000 plus print, okay? I personally don't think that's the case, but what do I know? But if we do get the consensus 187, if we get 200 to 240, we probably see a 8 to 10 handle up open. And then that would probably be a little bit more of a compelling spot to perhaps fade. If we get 125K or less, we're probably going to see a gap down, and then we'll see if you could create a higher low and buy that and look to strong stocks and see if they go green. So anyway, with that being said, you go back to this chart and you will see that here's the close. So if they wanted to push the envelope, okay, they could push it, right? Here is a moving average. Here's the top end of this. This is 179.38. You have midway through right here about 178.5 would be $1. So if we gapped up into this zone, perhaps you could short that. But who knows? You've seen crazier things. Maybe, they test this trend versus that. So just don't think, you have to short this move. Okay, at this point, can you say the 100-day is definitely the low of, the year? No. But here's your red dog reversal. Here's your build. If you played it for a tactical snapback, you could have sold whatever it is here, or some stocks that you were playing. I was playing eBay and BHI and a few others. And, and then that was a nice snapback. But again, it's just so funny. All the fear mongers here probably deterred a lot of people from doing that. With that being said, a lot of sectors did the exact same thing. In the Tuesday morning note that I send out, and if you're watching this video, if you're not opted into my morning note that that you can get every day, I think you have a tactical sheet with a lot of stocks on there that that could give you actionable plays that you're not getting. So go to T3 Live and opt into the morning note. But anyway, with that being said, let's just take a little look through XLF real quickly. This did not have a red dog reversal. It actually held, so it had a bigger percentage snapback, so it showed a little relative strength, okay, above the 150-day. Is Bank of America. Bank of America, look where, you know, the 150-day is, and then where the, you know, the 200-day is, and this thing held in very well. I don't know why the 50-day is not in here, so let's just put the 50-day so you could see, because that's where a lot of things might snap back to, and we'll have to see if, you know, if they could get through them or not. The 50-day was right here. So right now, Bank of America held the 50-day, while the XLF went all the way to the 150-day. Not saying it's going to break above this second, but at this point, looks best. So keep watching this one. I'll show you the contrast to that. Look at Goldman. Goldman went all the way down to the 200-day and still can't find a friend. So that's not the spot to be. Citigroup also, you know, just coming back. It's still well below the 200-day. Maybe it gives you a reflex move back to here, but this is not the financial to own. Once you had this breakout failure, you know, it was basically, you know, get out of the way for now, see what happens. And since then, it hasn't really been able to find the friend. So anyway, those are the banks. As far as the XRT, okay, nice little red dog reversal, same exact strategy. You could have picked what you wanted to, traded below the prior low, closed relatively strong. If you took it overnight, great, day and a half move. Now see if it could build. See if it holds half of this and can continue. All right, so with that being said, this opened up above this 2-day pivot, so it might have been hard to add, but you know, just want to show you how this strategy works in anything you're doing, okay, if it triggers. XHB, a little bit different. It did not make a low while the markets made a low, okay, it held, and then today had a very potent move to the upside. You have a descending channel here, so with that being said, it's trying again to get back, you know, in motion. So with that being said, it should hold this area to build, go sideways before going, or maybe just beelines, but ultimately this looks okay. XLI probably looks like most other things. This put a 2-day double bottom and bounced up. You know, nothing to be so happy about here. It still has a lot to prove also, and that's really it for those things, okay? As far as some stocks, came in today, Twitter. Twitter was the one that the earnings were fine, you know, but their user rate didn't go up percentage-wise. I personally think that it's good that this happened because, you know, if you want to accumulate it as an investor, you'll be able to get better prices. And I think, you know, if you remember, LinkedIn took about 4 to 6 quarters of backing and filling and going before it finally got it right and took off. Think about how many quarters Facebook needed before it broke above 33 and went. So Twitter that went as high as 70 now, it'll make it interesting. All right, I think that they're now public. You know, they don't have like commercials, join Twitter. You know, it's been an organic grassroots membership. So at some point, maybe they do advertising campaigns. Maybe they try and get, you know, their user rate up, which I think they will, and that'll be another time. But for now, we just have to obey the technicals. And as far as Twitter's concerned, it was a good trade off the open. Okay, off the open, it bounced. You know, you had a 15-minute low and it tried to bounce back, and then it faded. So you go to the chart, and you will see with Twitter that, you know, it has a huge hole now. So this is a huge, huge hole in Twitter that it's going to probably take a lot of time to, you know, absorb. You know, I sent a chart out and showed the beginning of this support range, one being the prior high, which it bounced off in the first 15 minutes, and then, you know, where it broke out from right around this 46. So we'll see what happens. At this point, you know, it closed in the dead lows, and all we know now is 49.99. If it were to open up and trade through it, maybe you get short. If it goes below, comes back above, you know, you try tactically long. If you want to see Facebook, just for instance, Facebook, I remember, you know, you got to go back here. You know, it had also a lot of holes in the chart. Look what it had to do here, okay? This came public, let's just show, you know, here, and it was a disaster. And then it came out with numbers that obviously were a disaster. And then it built a big lower channel, okay, before finally, you know, it still took a long time. Where's the other gap? Hold on. We got to still even look like this. It's still, look how many times it took. So this was one quarter. This was the first quarter too, bad. I think this one, you know, opened up and they faded. And then it went back here, came in, before finally, after I think this was how many quarters? Maybe 4 quarters. And then it had a sustained move to, you know, where it went later. So with that being said, you know, let's just go back to Twitter real quickly. Doesn't mean it's the end of Twitter. It just means that it's going to take time to build a pattern, and now it's got a lot to prove. And as a trader, this is your low. This would be a compelling type of support area, or I guess back down to the previous lows, and then you have this big gap that at some point, whether it's 3, 6, 9 months, it trades in there, and then you'll see. As far as Facebook today, I think it held in okay, with the fact that the group looked like it was a little weaker. So it's still, as long as it stays above here, I think Facebook is okay. LinkedIn came out after hours and gave you some time to actually short it. They announced poor revenues, I think light revenues and light guidance and light year guidance. So it was trading around 215, 210. You had some time to short it and whatever. It's been correcting since 255 all the way down. So it could have done, whatever, however it reported. If it reported strong guidance, yeah, but enough of this, consolidation at after hours above 230 could have been a buy. It wasn't. They tried to give it a pass for a second, but then once they said weak revenue guidance, and this is a growth stock with a high multiple, it had to come in. So for now, after hours, if you're trading it, I don't know where it is right now, this is one pivot. Here is a 198.60, which was below for a little bit, and then I guess you take a further look back, and you have more support if it doesn't hold that, closer to 180, and then down to here. So as of right now, after a monster move here, and if you look, just say by the way, with LinkedIn also, look how long it took. This was the IPO area. It took June, almost a year and a half before really getting a sustainable move to 250, with a lot of different type of gaps in between based on earnings. So again, back to Twitter, if you're an investor, hopefully you didn't chase it and you're not like in pain and bought it into this. That now we'll see what happens as it builds a new area, and as a trader, we'll just see how it handles $49.99. Anyway, going to Apple, kind of like the setup. I don't know because it's option expiration on Friday, and you know how horrible it trades then. Usually, if it's strong in the first part of the week, it's weaker on Thursday or Friday because they try and pull it in for options. Anyway, with that being said, let me show you the 60-minute, which I posted. The 60-minute chart of Apple looks a little bit like a rounding, somewhat of a cup and handle pattern, right? Here's your cup. Here's that red dog reversal where some people got long, which I didn't. And then now here's your handle going sideways. So at some point next week, if it wants to, or maybe tomorrow, it trades above 515.59 and holds above it, and then gets you a move from 495 to 515 is about 20 points. So 20 points brings you to retest the 200-day moving, curling down. And then that also would give you almost a retest of, the broken trend line that comes in. I guess if you go back to the daily real quick, you will see that comes in right around here. So with that being said, could be a good trade if you're watching it. I wouldn't overtrade it. I wouldn't let it just, control your day. But the longer it stays above, just say 505, 507-ish, the higher the probability you get another move to maybe at least 525-ish. Where to retest this low, which this low is 529, and it's some money. Sometimes there's just trades out there. As far as today, eBay was a nice trade. Went home long it yesterday, and then today it traded above the prior high and gave you a nice little push, and that's 2 days. So hopefully you made some money there. I just as a point went flat it. We talked about BHI a few different days, and finally it had a clean move. That was a nice trade. So what I did is, because I've been getting so messed up with the spiders, I'm like, I'm not going to take the spiders home. I'm going to take two, few stocks that I think look good, and I thought BHI and eBay looked good. So that's what I went with there. Real quickly, someone was asking me, how did you make money long Twitter today? You go to the 5-minute chart and you will see it put in a pivot low right here. This pivot low is 50, and then came back up and gave you a small trade. So this is, this was your first move. So I was buying it above that 51.74. Move, held, went as high as 54. So from 50 or 51.5 to 54, it's a nice little day trade. And then once it kind of broke this area, or once it broke below 53, I just said I'm not going to trade it, and I got away from it. I didn't trade it the rest of the day, thank goodness, because it just trickled down, and that was that. It was just a scalp. Let's talk elsewhere. GMCR, lots of excitement, big gap up, came in, did nothing. So now we'll see how it handles this gap in coming sessions, if it could absorb above or pushes in. Not a really good day trade. And then again, today was difficult like that, because some stocks, if you come back to me, there I am, reported decent numbers and traded well, and then they just out of nowhere kind of failed. You look at AOL. AOL gapped up on a good report, boom, came in, and then went lower, right? Good report, quick little move, wide range bar. This could have got you out of the stock, because that shouldn't have happened. Held here and then continued lower. So AOL, if you thought it would be a gap and go, not an easy trade. Yelp was different. Yelp had a gap and go and closed really strong. Let's go take the 5-minute there. This one was, actually looks very tradable. Push, bull flag, continuation before coming in. So that was a lot different than AOL that had a push and then boom, and then put in a lower level, couldn't reclaim it and continued. So there are ways to look at it on a 5-minute basis to see whether or not, there could be some more follow through. And so that was Yelp. And then you go to, people were talking about soda. Soda, gave you one quick move, came in, and then I think Citron came out positive, and then it couldn't hold 40. I tried to trade here between like 39.50, and then it just didn't work, and I got away from it. As far as some other things that people were looking at, this little guy, Candy, KNDI. You look at the daily chart. If you want to look at some little guys that might not be affected, I know Sperling is still long this. This probably, even if the futures are down with the jobs number, you might be able to buy it. Held the gap. It's been on the move. It's been a nice trader. So there's a decent spot there. Some are also looking at this HIMX still, and it just holding sideways. Not much to do here yet, but looks okay. What else are people? Let's talk about gold for a second. Gold's still wedging. Gold hasn't decided what it wants to do yet. And tomorrow should be something that people watch into the jobs number, right? It's nice and tight and at this trend line. People thought it was going to go here, then here, and it hasn't. So it'll be interesting to see what happens tomorrow. So keep this on the radar if it resolves to the downside and it comes back just like 2013 where it fails at key points, or if it changes and gives you another boost. So yeah, I would see if, right now you really can't figure out, I guess you can. If you're a bull in gold and you think it's holding up well, you're probably involved in a little bit, but you have some risk with the jobs tomorrow. If you're a bear, you have to be a little careful too, because it's acting different than it had acted in 2013. So you can almost wait for it to resolve. So you have this, it goes higher. This, it goes lower. That's the beauty of a wedge. When it gets into motion, you could go with it. We saw that happen a few different times in gold. Remember this wedge right here? That was really, really tight, and people weren't sure if gold was going to go up or down for 2013. Well, boom. Okay, and then it's done it many different times. But anyway, wedging right here. Check that out tomorrow. TBTs just had a really nice bounce for themselves. It's funny how it works. Here was that capitulation to the downside. Inside day, a little bit of a trap, and now you had your 3-day move. So that little reflex move is out of the way. Now it's kind of hard to tell. And let's just wrap it up. It's Thursday. The corrective process. Feels like these computers know how to really get you a little bit flat-footed or thrown off your game, where they push things a little bit too higher if you want to think short, and then sometimes too low if you feel like you're trying to play a bounce. Lots of stocks have not created equal now, where you're getting divergences within sectors, and stocks that look strong are just changing, and stocks that look weak are getting a bid. So you have to really know why you're looking at these things and what you're looking to get out of them. If that's the case, if you're day trading them, just limit your time frames. If you're on 15 and 60-minute charts, make sure you have a 3 and 5 minute chart. If you're not day trading and you're looking longer term, then don't worry and just make sure that they don't violate your macro trend lines, which the market hasn't yet. So with all the chaos and all the doomsday guys, we're still now down only 5% off the highs in the S&P or less after being up 30% last year. So don't get caught up in the hype. And that's what there is. There's a lot of hype. With social media, it makes it feel like everything is 10 times more hyped up and in your face, where it wasn't way back when. Don't get caught up in that. Don't follow too many people. Follow the people you like and you trust. And if you think that your Twitter feed is kind of getting you a little screwed up, turn it off. If you had the media turned off yesterday, and probably even your Twitter feed, and you just looked at the chart of the spiders or any different sector out there, all you had to see is 2-day pivot, traded below, came back above it, oversold from 184 down to 174, 150-day moving average, buy a little bit here, close pretty well, take some home, add here, and that was your trade. Instead of listening to guy come out and say, you know, if we don't hold here, it's going to be 40% lower, and you're like, okay, I just don't want to get caught. But with that said, let's just tie it up. Tomorrow, big jobs number. I'll be trading out of short hills, so I won't have a microphone, but I'll be typing into the VTF. Again, I think it's pretty smart to be neutral, the indices at least. If you're in stocks that you've been in, fine. You know, you have them for a reason. But as far as the indices, if, you know, 200 to 225 to 250, probably up 10 handles or so, and it might be fadeable. 125 or 100 or 75, probably down 10, 15 handles, and then who knows, maybe we hold higher. And keep tactically making some cash flow until you build some green days, and then you feel better, and then you start being a little looser. You add to your size, you add to your holding time, and then you're back on track. It's only the first week of February. Have a great night. I'll see you tomorrow.